The IT sector that had managed to perform better than expected in the July to September quarter is now gearing up for the seasonally weak second half of the fiscal. IT major TCS will kick off the Q3 corporate earnings next Monday, followed by Infosys, HCLTech and Wipro later in the week. In Q3, analysts expect demand to have been firm, but revenue is likely to have moderated amid a deteriorating global macro environment.
We expect IT industry to demonstrate resilience in terms of demand in Q3FY23, despite of having uncertainties from the global economies, and also Q3 is considered to be a seasonally weak quarter. We can expect the revenue growth momentum at 2.5 to 5% in CC terms in Q3FY23 on Q-on-Q basis. We can expect some moderation in the revenue growth momentum and also in the deal wins in Q3 FY23 due to uncertainties. We expect Infosys to outperform in Q3 FY23 on the large cap side with a Q-on-Q growth of 4% in CC terms. In mid cap part, we expect Persistent to surpass the growth which as compared to all its peers.
Meanwhile, Kotak Institutional Equities has pegged the sector's sequential revenue growth even lower at 0 to 3% in constant currency. According to Kotak Institutional Equities, revenue growth will moderate to high single digits to low teens on a YOY basis. EBIT margin has bottomed out and will likely improve, albeit moderately. The brokerage expects HCLTech and LTIMindtree to lead the pack with sequential growth of 3% each, followed by TCS at 1.9%. Wipro and Infosys are expected to report a 1% growth, while Tech Mahindra and Mphasis may end up with flat revenues. Besides, the street will closely look out for cues from management on demand slowdown and possible client budget cuts.
On the cost front, we are expecting some moderation in the employee cost as well as some cooling off in attrition level. In addition to this, weakening of rupee will also aid in margin improvement. Further, we expect the tone of the management commentary to be positive for Q4 FY23 and Q1 FY24. However, they may cite some challenges in the near term. Further, management comments regarding the sector outlook as well as outlook regards to company's revenue, cost and order book will be the key factor to watch in for Q3.
At the bosses, Tech Mahindra, Wipro and Mphasis are the top IT losers, having slumped to 32 to 42% over the last 9 months as compared to 4% gain in the Nifty 50. Analysts at Investec Capital Services believe that revenue weakness in the second half of FY23 and a tepid start to FY24 could remain key risks for IT stocks. This could reduce Tier 1 growth expectations to 6 to 7% versus 8% currently, leading to likely contraction in PE multiples, they say. That said, equity markets will track domestic services PMI data today along with the recent meeting minutes of the US Fed.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.